5% of their exports are purchased by the U.S. So as a COMDOL, it's benefiting from stronger crude. As a COMDOL, in terms of its move lower, a stronger crude oil market often is reflective of a weaker dollar, which allows the loonie to strengthen against the dollar that much more. So it's kind of a perfect storm when you have strong commodities based upon a weak dollar, and then you see the loonie itself has a lot of bullish momentum behind it because of the financial stability of the Canadian economy right now, despite the fact that it's so attached to the U.S. Okay? So back to who's awake, back to the rhythm of the day. So I know the fundamentals swirling about the market. I know that I want to take advantage of the loonie strength, and I think I'd like to do it perhaps on a short-term basis because let me show you a couple things. If I head on over to the charts, what I'd like to do is take a look at the loonie and determine, first of all, what's the directional bias of this daily chart. There's a reason that I want to go short term on a lot of these pairs right now, because a lot of these pairs lack any kind of bullish or bearish trending directional bias, which is why I've been utilizing the daily chart to determine that, and then utilizing the short-term time frames to capitalize on that movement. So I might focus in on the, mostly the 15, 30, and perhaps even the 5-minute time frame. Okay? Now, those three are short-term time frames that don't require necessarily longer-term organization of sentiment and momentum. So when the market lacks a trend, okay, I can look for perhaps trending characteristics shorter term, even as the daily chart bounces all over the place. Right now, the daily chart's taking on slightly more bearish momentum and sentiment, but that doesn't mean there's not opportunities to take advantage of bullishness or bearishness intraday, short-term intraday. If I'm looking to capitalize on that short-term movement, I need to understand from both a risk and reward perspective what the type of price movement is that I'm going to see hour to hour. So notice that the hours between 8 a.m. and approximately 10 a.m. Eastern Standard Time are the most volatile for the pair. Now, the volatility extends to about noon. And why is that? Understanding price action means understanding who's awake, right? What happens at noon Eastern Standard Time? Or in fact, as you see the volatility drop a little bit, that's the band across each one of these green bars, which represents the average. If you want to just key in on the average for now, notice when the average starts to drop a little bit. Well, Paris and Frankfurt start leaving the party, right? Noon is when London starts leaving the party. The market may be 24 hours, but people are not. Financial centers are not. Everybody pretty much works kind of an 8 to 5 p.m. workday. I don't care where you are in the world. Okay? That's the rhythm of the dollar Canada. Now, what I want you to also keep in mind is a lot of traders, and this is one of the pitfalls that that befalls a lot of traders, and I think the auto chart as PowerStats would prevent that because it allows for a greater understanding of market price movement, is a lot of traders like to trade the evening, which is fine. But who's awake during the evening? You're talking about primarily, pretty solely, the Asian market. Okay, until about 2 a.m. Eastern, when Europe joins the party. Notice that we get that drop off when Europe leaves, and the markets pretty much start to fall in volatility when New York or the U.S. is the only open major financial center. Notice this drop. And it doesn't actually get any better in Asia. Asia's very quiet. So one of the earliest mistakes I noticed traders making is that they look at the market between, say, 8 and noon, 8 a.m. and noon, and apply those same expectations of price movement and volatility for 8 p.m. to midnight. It's only 12 hours apart, right? 8 a.m. to noon, 8 p.m. to midnight. Completely different market volatility characteristics, completely different price movement expectations. It's roughly half, isn't it? in terms of price movement. So if I'm day trading or any kind of entry, my expectation for price movement and also the levels that will be in play become much smaller. If I'm going to look for different patterns to follow through, if I'm playing some sort of chart pattern reversal or breakout, my expectation for follow through during the 8 a.m. to noon chunk of 4 hours is very different than that between 8 p.m. and midnight. Okay? So this rhythm in terms of price movement is fairly unique to the dollar Canada, but not that dissimilar to most dollar correlated majors and COMDOLs. There is an exception. Now obviously cross rates would be one exception. One of the major exceptions is the cable. Okay, so let's take a look at the cable. And again, we're focusing on movement per hour. We'll probably discuss price range forecast in an upcoming discussion, because this is, again, another very interesting tool. But right now we're looking at broad strokes. Price range forecast, for those of you that are curious, is basically slicing each hour into more detail. Okay, very powerful tool as well. Take a look at the cable here. Now, one of the things that when I was traveling, doing a lot more traveling, when I was doing a lot more teaching, I don't do as much teaching as I used to. I've basically limited my teaching to just a few specific places, and really just a few specific places focused around the tools that I use. AutoChartist PowerStats being one of my staples. One of the things that I used to always get asked is, do I get up at 2 in the morning? I live on the East Coast of the U.S., and do I get up at 2 in the morning? That's just unrealistic. I have a hard enough time getting up at 6 in the morning, okay? So do I get up at 2? I don't. Now, I realize that advice, and people used to ask, do I have to? And I used to say no, and I still stand by that. Except for when you go do the research using PowerStats and discover that perhaps based upon the movement of the pair that you choose to trade, it might behoove you to get up earlier. I'm not a big cable trader. I don't trade a lot of pairs that trade against the pound sterling. I find the pound sterling to be a pair that, or a currency that if you are trading it, it tends to be one you focus on. In fact, most of the people that I know that trade the cable tend to trade the cable and oftentimes only the cable, which is fine. Okay? Or they trade different pairs that involve the pound sterling. The pound sterling becomes their focus. The pound sterling I call the drama queen. It's got a rhythm and a behavior all its own. Okay? It marches to the beat of its very own drummer. So it's a pair that when I am looking for unison and harmony between the futures pairs, futures contracts that I trade and the Forex pairs that I focus on, one of the things that I find is oftentimes the odd man out is the cable or those pound sterling pairs. So I tend not to do a lot of trading in the cable. I just want to make sure you guys know. However, if I did, and when I do, it's not that I never trade it, it's just not part of my typical trading behavior. When I do, I have to acknowledge, unless I'm getting up at 2 in the morning, okay, there's a pretty good chance that I'm dealing with a market, if I'm looking at it during the U.S. Open, that has made a lot of significant moves earlier in the day when Paris and Frankfurt were active. And obviously when London joined the party. So notice the bursts in volatility. Okay? This is very different than the dollar Canada, isn't it? Completely different. So if you were to tell me I'm really focusing on the cable, I do a lot of cable trading, my answer as far as getting up at 2 in the morning is very different. Yes, I think it would behoove you to get up at 2 in the morning. Could you take a cat nap before the U.S. Open for about an hour? I think you could. I think if you were there for the Paris and London Open, Paris, Frankfurt, and London Open, and then watched the overlap end. In other words, remember when Paris, Frankfurt, and London Open, they're overlapping with the Asian session. The Asian session overlap ends at 4 a.m. again, East Coast time. Between about 4:30 and before about 7:30, almost 8, could you kind of go take a cat nap? Probably. Take a look at the way the volatility drops. But especially so at 6 and at 7 a.m. 8 a.m., 9 a.m., 10 a.m., 11 a.m. You can see it picks up again, but not nearly as much volatility or average price movement, as you can see by this band across each bar, as the European and the UK open. And also the overlap ending. So each one of these pairs has an individual rhythm, individual price movement ranges. I hope you also see how much more in terms of price movement range there is in the cable. Now, the price movement range here, 0, this is 10 pips, 15 pips, 20 pips, 25 pips, 30 pips, 35 pips. So in 5 pip increments, okay? Take a look. Our top is nearly 70, okay? Compare that to the Canada that we were just looking at in terms of price movement range. Our top here is 40. Okay, we didn't even reach that, or 45, and we didn't even reach that. So see how much less in terms of pip movement in the Canada there is compared to the cable, our drama queen. All right. So the day traders out there, I hope these are some broad strokes, but I hope I've introduced some ideas that you can ask yourself as far as when I am day trading, what are my price movement expectations? What is the volatility and where is it coming from? The economic calendar is a big part of that. Who's awake is a huge part of that. When are they coming in and leaving the market? Again, big part of that. What type of volatility does this particular hour of the day bring to the table? So these are all the questions you have to understand or have answers to when you are trading short term in order to manage risk and reward expectations. Okay?